So there's a lot of data coming out this week. It's been a really interesting perspective into where the Australian economy really is. And what I'm going to do today is explain to you how the Reserve Bank is on the verge of destroying the Australian economy, what that means for interest rates, and what that inevitably means for the real estate market. Now, retail sales is something that I've been watching very closely. If you watch my previous analyses, you will see that I've been pointing to retail sales as a fresh gauge into where the Australian consumer is. And I need to see where the consumer is because that tells me where inflation is going. Inflation is a byproduct of demand, and demand is driven by consumption, investment, confidence, sentiment, those kinds of things. Retail sales tend to chop around a lot. They bounce around a lot. And in November, we had quite a soft number. It wasn't a good retail sales number. But then in November, things bounced back. And I came out and I said, this bounce is quite interesting. If I look at the November numbers, there were two things that were in the back of my mind. I was looking at Black Friday, and it was a longer Black Friday. So I said, there might be something here. I was also looking at migration and saying that, with all this migration and with a longer Black Friday, I really need to see what's happening in December to form a view of where the consumer is at. We had a rate increase at the beginning of November. It was not expected. And the RBA really doubled down. New governor, really dented sentiment. I could feel it in December, but I didn't have the data and I didn't have the statistics. And I said, I need to wait to see where December retail sales are. I first got information on jobs, and the December jobs number was not a good number, 50,000 jobs lost. And I thought something's happening in December. And when I saw this week, the retail trade numbers, it really reaffirmed to me that the consumer was spooked in December. That November interest rate increase has really caused damage and is causing damage now. Even at the time of me recording this, I'm looking at December numbers, but I've got no doubt in my mind that the consumer in Australia is under so much pressure that January, February, March retail sales are not going to be good. And the reason why I have confidence around that is on this number. If we dig into this number now, and I look and see how bad this number is for a December. Retail sales fell by 2.7% month on month in December. Now, how bad is that? That is, you have to go back to the pandemic to see retail sales falling by this type of magnitude. So it's a pretty bad number, particularly for a December. And keep in mind that retail sales for the year, if you compare December last year to December the previous year, they're only up 0.8%. Now, some people might say they're up. What's the problem? The problem is this. Inflation was much higher than 0.8%, and we had population growth. So when you take into account population growth, you take into account inflation, retail sales, and the rest of the economy is actually going backwards. And there's a term that's being thrown around, and I'm going to use it. It's called a per capita recession. We in Australia are in a per capita recession. That means when you strip out all the new people that have come in, things are actually going backwards. And aggregate numbers like sales rising 0.8% over the year is only happening because we have had inflation and population growth. Volume, like for like, we're starting to go backwards. Now, why? The reason for this is purely, I believe, because of the RBA. The RBA has really started and is starting, and I don't use these words lightly, to destroy the Australian economy. And the RBA is always late to the game. The Reserve Bank of Australia, I usually call it, since 2011, I've been using a nickname. It is the Reverse Bank of Australia. And what that means is that they are always late to the game. They always overreact, and they are overreacting now, and it's causing these things to start to come down. It's causing pressure. It's causing businesses to question whether they need their employees. It's causing people to question whether they can hang on paying these high rents and these high mortgage costs. And the Reserve Bank went too hard during the pandemic. They put rates down to a level that didn't need to be at zero. Other countries around the world may have needed to come down that hard, but the RBA, in hindsight, went overboard. And they went overboard when things were tough, in the context of the Australian government announcing huge fiscal stimulus. JobKeeper, JobSeeker, all those government programs, the ability to take money out of your super if you were in financial distress. And on top of that, home builder grants. And on top of that, RBA coming to zero and providing an open facility to banks to lend at ultra low levels. And the cherry on top, saying that we're not going to increase rates till 2024, is what I believe the biggest policy mess up in Australia's modern history. The RBA screwed things badly by going overboard. They caused inflation. And now they have been overreacting to inflation. I'm going to show you what I mean next. Retail sales wasn't the only number that came out this week. Inflation data has come out, and it shows that the RBA has overreacted. And, they moved in November. That November hike has still yet to filter through the market. And that was overboard. And again, they overreacted on the way down. They've overreacted on the way up. They're going to have to cut rates towards the end of the year. And what that means is that the RBA loses credibility. We lose confidence in our central bank, and the property market's going to run harder at a time where we haven't been building, we haven't been creating supply. But let me jump in now into the inflation data and show you what I mean by them completely messing this up and starting to destroy the economy. So inflation data gets reported officially by the Australian Bureau of Statistics in two ways. We have quarterly data, which comes out, but then there's the monthly indicator. And I like to look at the monthly indicator. But before I get to it, I want to show you what the quarterly data was showing. It showed that the CPI, Consumer Price Index, was up only 0.6% for the quarter, for the past 3 months. And it shows, if you have a look at the composition of the last quarter, keep in mind, the last quarter is all old news. The last quarter hasn't been impacted by the most recent interest rate increase by the RBA. And if you have a look at the components that are going up and the components that matter, it's really the things that are going up are the things that have been pressured by the RBA to increase. Alcohol and tobacco, that's government. They put taxes through, and that's purely a policy decision. If the government wants to reduce the price of alcohol and tobacco, they can do it tomorrow, but they're not. If you have a look at housing, it's up 1% for the quarter, inflation of 1%. And the reason for that is that by putting rates up, guess what? It's become a lot more expensive to build a house, to develop a house, to fund a house. And that feeds through at a time where you've got record migration, and at a time where you've got very limited supply. Putting rates up has actually made the cost of housing much more expensive. Insurance and financial services, same thing. The finance industry and insurance companies, why do they put premiums up? Because it costs them more. The cost of money goes up. So interest rates rising is causing inflation. The only sectors of the economy where you've got inflation, significant inflation, are those that are either impacted by government or impacted by the RBA's policy decision. So I just wanted to show you, before I show you the monthly indicator, where we're at, and then I'm going to make a call and reaffirm my calls around interest rates and the property market. Okay, here we are, the monthly indicator. The most live data, the freshest data around inflation, and this highlights the huge policy stuff up by the RBA in November and why they're starting to destroy the economy. So for December, the monthly indicator, prices up 3.4%. Now, the RBA's target is 2 to 3%. Okay, you've just had 650,000 migrants come into the country, and inflation is now at 3.4%. That's not problematic. That is back down to normal. You've still got a lag from the pandemic, and inflation is no longer a problem. If you actually have a look at the trend, and I'm showing you where I find all these numbers. So I like sharing my screen so that everything that I say and everything that I do, you can learn from it and you know how to go out and find these numbers. So seasonally adjusted number, the CPI, look at it. It's gone from 4.9, 4.5, 3.4. Inflation is drastically falling. And this is before the November rate hike. The November rate hike was a huge mess up, was a huge overreaction. And not only is it causing inflation to fall, but here is why I call it a mess up, and here is why I call it a destruction. Because retail is on its knees. The consumer is on their knees. Housing is very unaffordable for homeowners and renters. Building is very difficult, and jobs are being lost. 50,000 Australians had to lose their job in December purely because the RBA is cleaning up the mess that it created. And that, to me, is a huge policy mess up. If you have a look at the US economy, they've had an inflation problem, but they're not losing the same extent of jobs. The Federal Reserve had to put rates up, completely different market, completely different fundamentals, completely different dynamics. And the RBA is trying to mirror and follow central banks around the world, but it is so wrong, and it has purely stuffed this up. And this is what I believe happens next. As you can see, inflation, now we're at 3.4%. It might go up a little bit, it might come down, but that's not problematic. For a country that's growing and a country that's just come out of a pandemic, that's not a problem. And if you have a look at the components that are going up, again, have a look at rents, up 7.4%. Why are landlords putting rents up? Because interest rates have gone up. So all these housing costs are all up because of the RBA. Alcohol and tobacco up 10.8%, 4.6%. Government driven, taxation coming through. Alcohol is not becoming 11% more expensive to create. It is the taxation that's going through. Food is starting to moderate. Everything else is okay. Will moderate as the economy softens, inflation comes down. But we now find ourselves with the Reserve Bank of Australia having to go back into reverse. And they've just put rates up in November. At the beginning of the year, I came out, even late last year, I came out and I said rate cuts will have to come third quarter of 2024. I now think that the market's going to start pricing them earlier. And that's really bad. That's bad because you've got the market calling out the central bank for another stuff up, another policy overreaction. And we find ourselves in Australia in a situation where what the Reserve Bank says and does is losing credibility. The market is now dictating where central banks go. And the data is confirming that. The data is confirming that the market's getting it right, and the central bank has always overreacted. That's really unfortunate for Australia because it means we're going to have to lose jobs. It means that unemployment's going to have to rise. It means that the Reserve Bank is going to have to cut. And we find ourselves in a situation where unemployment will rise, interest rates will cut, house prices will keep going up, which is great for property investors. But I'm really thinking about everybody else, momentum, business, consumer confidence, and this ain't good. So we need a Reserve Bank that is more data dependent. We need a Reserve Bank that is more patient. We need a Reserve Bank that doesn't overreact on the way down and on the way up. And we need a Reserve Bank that's very mindful, that should be very mindful that Australia is a high growth country. We've got a lot of migrants coming in. Inflation is usually transitory, and inflation is not the be all and end all. We're in a different market environment and we really need a balancing act. So guys, hopefully that gives you a different perspective. I've been very opinionated this week, but I feel really passionately about the need for us to have more monetary policy stability. The government's got its act together in terms of the fiscal situation. They're bringing in a lot of tax, which I don't want to be paying more tax. Nobody wants to be paying more tax, but the fiscal position is improving, right? That huge debt burden that we've got can start to get addressed. But our monetary situation needs to improve. We really need a shake up at the RBA, and they really need to start, instead of being reactionary and in reverse all the time, to start having some better modeling, to start having a better understanding of the implications of their actions to everyday Australians. Happy investing. And if you like this and find it useful, share it with somebody, subscribe, and let me know what you think.